Good evening. I'm David Gerald from SIAS. Today, I welcome you to SIAS Sunrise Sunningdale Virtual Dialogue Session. This is presented by Sunrise Technology Investment Holdings and SIAS. We do this, as you know, many of you who have attended previous dialogue sessions, we do this for your benefit. We are very, very pleased that we have been able to collaborate with Sunrise Sunningdale to ensure that all your questions and doubts are clarified. You know, there are many questions that you have. Indeed, you have sent some of your questions in, and we will answer them. The order of the day would be opening address, a very short address by me, and then presentation by Mr. Koh Boon Hui, Director of Sunrise Technology Investment Holding and Chairman of Sunningdale Tech. And then we will have the Q&A. Let me first say a few words before I introduce the distinguished panel. So good evening to all of you who have taken the time to join us today, and welcome to this dialogue. Now, the offerer and the company here, and it will be moderated by me. And this session is to provide an avenue for you, as I said earlier, to retail investors to highlight your concerns regarding the offer, and for the company and offerer to address your concerns to the best of their ability. This is so that shareholders can make an informed decision for yourselves. SIAS does not recommend how you should vote, but we facilitate your meeting with the board, the company, and the offerer. This dialogue is even more crucial as the current COVID-19 safe distance measures do not allow you shareholders to meet in person and address your concerns at the EGM before casting your vote. The K-shaped recovery was termed and frequently used to describe the winners and losers from this pandemic, which has somewhat transpired a flurry of corporate actions in 2020. The likes of mergers and acquisitions as well as privatization made plenty of headlines, with Sunningdale Tech being one of 17 privatization exercises in 2020. Despite its best intents to execute Sunningdale's long-term business plan and provide existing shareholders an opportunity to exit at a premium, this exercise is not without any controversy, with the significant discounts between the takeover price vis-a-vis the NAV, as well as historical prices being the case in point here. I am therefore pleased to have the involved parties with us this evening to provide a holistic view of the proposed privatization exercise and clarify the questions you shareholders have sent in. Let me introduce first the panel today. We have the following to help address the issues raised by you. Mr. Koh Boon Hui, Director of Sunrise Technology Investment Holding and Chairman of Sunningdale Tech. Good evening and welcome. Mr. Kaka Singh, Lead Independent Director of Sunningdale Tech. Good evening. And Ms. Wong B. Eng, CEO of Provenance Capital, the Independent Financial Advisor.
Thank you.
So I also want to say that Mr. Koh, you have the flash. Where is my? You know that Mr. Koh is here in your capacity as a chairman of Sunningdale.
No, in my capacity as the offerer.
As the offerer only. All right, nothing more. So all right, so please remember that. So without further ado, let me hand over the session to Ms. Boon Hui, and who will take us through a presentation and the rationale for this transaction.
Thank you very much, David. And I should make clear that I'm here in my position as the offerer. And I would also like to thank shareholders for taking the time this evening to attend this. Fundamentally, we have two objectives. One, I want to have the opportunity to explain the rationale for this acquisition to all shareholders. Let me touch on the first point. The offer basically gives shareholders an opportunity to exit at a premium. The premium over the last 12 months traded prices, and in fact, over the highest price that has been achieved over the last 12 months. This is important because Sunningdale has been an illiquid stock, not just for the last 12 months, but in fact over the last 5 years. But we continue to believe in the long-term potential of this company, and for those of you who share that belief, you have the option of opting for shares in the private company. The second reason we are making this offer is to ensure that we can secure Sunningdale's long-term future. The company is at an inflection point. Over the course of the last 2 or 3 years, US-China trade tensions have been rising. This has been exacerbated by the COVID-19 crisis. Sunningdale, I believe, needs to pivot and needs to pivot fast. Let me try to explain this. For the last 30 years, companies like Sunningdale have pursued a very simple strategy. We manufacture in low-cost Asian countries, and we export to the developed market. Now, before I explain the challenges that are before us, let me take the opportunity also to make a point about where we stand in the ecosystem. At the top of the pyramid, in this ecosystem are the brand owners, companies like Apple or Huawei. In the middle of the pyramid are the people who assemble these products for the brand owners. So these would be companies like Hy-P, or the giant in the industry, Foxconn, or someone like Venture Manufacturing. At the bottom of the pyramid are the component suppliers, different kinds of components, metals, plastics, rubber, and Sunningdale, together with a company called Fuyu, happen to be precision plastics component suppliers. So I would like to be clear. Sunningdale is a manufacturing company. We are not a tech company. Some of our customers may be technology companies, but we are basically a manufacturing company. In fact, 42% of Sunningdale's revenue is to the automotive business, the traditional automotive business, which I think is as far from being a part of the technology ecosystem as you can get. I do not know how the trade tensions between China and the US will develop, how it will wax and wane. But I think on probability, it is likely to escalate as China continues to ascend in the world. COVID-19 also brought home to bear to many of the brand owners a significant shift in their thinking. Cost is still important to them. But today, security of supply, resiliency of their supply chain has become major factors. While I cannot forecast the future, I can tell you what the customers are telling us today. We need you to supply us at least partially in our own backyard. We need you to be there with us. But if you say you can't do this, then we need to look for alternatives. So, that is very clear. The option of remaining status quo, I think, is not possible. That's the reason I think that Sunningdale needs to pivot, and that it needs to pivot fast, And that's the reason why I think it would be better executed as a private company. Now, many people may think that this is just a numbers exercise. It is not. Sunningdale has a sentimental value to me. I started this company more than 30 years ago. I obviously want to see it continue to thrive. But I'm also concerned about the 700 employees I have in Singapore. Sunningdale is an unusual SME. We have 3 factories in Singapore and 700 people working for us. Many of them have been with us, with me, for more than 2 decades. In fact, last month, we had our long service awards. We had the usual 5-year, 10-year, 15-year awardees. But believe it or not, I gave out awards to people who have been with us for 20 years, 25 years, and 30 years. I'm equally concerned about the people who work for Sunningdale. My entire senior management team has an average of almost 20 years of service. I've been with these people since sometimes when they were kids. I know them and I know their families. I'm equally concerned about their life and their livelihoods. So there is a sentimental value to this as well. Let me move on to the facts. The offer is simple. A cash consideration of $165 per share. This is significantly, as I said earlier, at a significant premium. But you also have the option, if you would like to take the journey of transformation and privatization with us, to opt for shares in the private company. I should say that there has been no other offer since this was announced on the 9th of November. Now, questions have been asked about why the cap for the share scheme is 30%. There are several reasons for this. One, I feel that in order to execute what I have to do for Sunningdale, I need to have operational control. Secondly, such an offer is actually very unusual in the market. In the last 5 years, there has only been 2 other instances. InnoValues in 2017 and HMI in 2019, where it is a cash or scrip consideration. And in fact, I must be honest with you and tell you that I'm really, really flattered by shareholders who think that 30% is too low. The reason is because in a closer comparison, like with InnoValues, the take-up rate for non-committed shareholders was 1%. In fact, it was the concern I had about almost all shareholders opting for cash that made me approach Sam and Yarwood in the first place. I was concerned that if everybody opted for cash, the package put together could not support it financially. So I had approached them to essentially underwrite by taking up the shares if everybody else opted for cash. Right? They have been invested with me since 2014. They have seen the ups, and of course, in recent years, they have seen the downs. They are business people, not financial investors per se, and therefore, they shared my long-term perspective on this. And that is the reason why I had approached them in the first place. Let me touch now on the offer itself. As I indicated earlier, it is at a 42% premium to the last 12 months volume-weighted average price. It is also higher than any of the traded closing prices of Sunningdale over those 12 months. There have also been questions asked, for example, about the NTA. I would like to point out two things. One, the offer is actually at a 40+% premium to the price, historical price over NTA over the last 12 months. I think price NTA is important, but I think financial metrics need to be looked at holistically, and I can come to that a little bit later. But I should take this juncture to point out that if I look only at the SGX, and I look at companies whose market cap is $500 million or below, which is where Sunningdale is, more than 60% of these companies trade below NTA. We will come back to that later. And as I indicated in my opening comments, the liquidity of Sunningdale stock is extremely low, not just last year, but for the last 5 years. If you were a significant shareholder of Sunningdale, your ability to exit and realize this investment is somewhat challenging. At this juncture, perhaps let me pass you on to the independent financial advisors for a discussion on valuation.
Thank you, Boon Hui. Okay, in our assessment of the scheme consideration, we have taken into account various factors. One of them, just in this next few slides, I'll just highlight some of the key metrics that we have used in comparison with the comparable companies and the precedent M&A transactions. For PER comparison, the offer price represents a PER that is way above the mean and median of the comparable companies and the precedent M&A transactions. PER ratio is used to measure the ability of the company to generate earnings, so that's one of the bases. The next slide will show you Evie Ebitda comparison. The offer price has this implied Evie Ebitda multiple, which is comparable to the mean and median of the comparable companies and the precedent M&A transactions. Evie Ebitda measures the enterprise value of a company and the pre-tax cash flow performance of the company. So those are relevant metrics. The next slide is price to NTA comparison. Yes, if you look at the offer price, it is lower than the mean and median of the comparable companies and the precedent M&A transactions. In fact, it is at the lower, close to the low end of the range. In the next slide, I would like to show you why we think the earnings approach, in particular the EV/EBITDA multiple, is a more appropriate approach in valuing and assessing the offer consideration compared to the price to NTA. This is because the Sunningdale Group is not an asset-based business like a real estate or property development company. In addition, all those factories represents the company's production capacity, and they are not about to cease operations or realize most of the use of the assets. And third, it is not so easy or straightforward decision just to dispose of the properties to realize the market value. There are many considerations, right? So finally, in arriving out at our valuation range, we have taken into account various factors, like I've mentioned, PER, EV/EBITDA, price to book, and we came up with this range, and the offer price is actually at the top end of our valuation range. So that's the basis of why we feel that the offer price is fair and reasonable. And I would encourage investors to read our IFA letter in full, which is contained in the scheme document. Thank you.
Let me just comment here a little bit, as I said earlier, on the NTA question. Perhaps I can illustrate with an example. Let's say that I buy a factory for $20 million. And a few years later, it is valued at $30 million. My book value has gone up. But I need that factory to do manufacturing and to maintain my capacity. Unlike a real estate company, I cannot realize that value. Because if I were to sell the factory, I would have to buy another factory to relocate my manufacturing and capacity. It is unlikely that I will buy the new factory for less than $30 million. It has to be in that same ballpark. That's the reason manufacturing companies, for example, can't realize the appreciation on that. But that's not the end of the story. Relocating manufacturing lines is a really, really costly affair. Highly automated manufacturing lines, like the kind that Sunningdale has, will cost $1 million to several $1 million a line to relocate, depending on the line itself. But more important, because we are in the precision components business supplying to brand owners, each time you relocate, the customer needs to requalify the manufacturing process. The requalification takes anywhere from 6 to 12 months, depending upon the product. That's the reason why for manufacturing entities, Sunningdale and many of us actually trade below our book value because that book value is hard to realize. It is even harder when so much of our book value is in the form of machinery. The machinery is useful to me, but when you have tried to dispose of machinery when people have to, you seldom achieve the book value because it is not of as much use to someone else unless he happens to be in the same business. For all of these reasons, while NTA should be considered, I think manufacturing companies like Sunningdale, needs to give weightage to enterprise value and to earnings as exemplified by PE ratios and EV over Ebitda valuations. I want to ensure that, that we all understand where Sunningdale stands in the ecosystem. I had mentioned earlier that the entire ecosystem of this business consists of brand owners at the top, right? The people who put the products together in the middle, what we call ODMs or EMS services, and then the components manufacturers like ourselves. Comparisons have been drawn between Sunningdale, for example, and Hi-P because they happen to have come up with an offer shortly after ours. But the two businesses are totally different. The financial metrics you can see on the right-hand side of this chart should tell you that. But Fuyu and ourselves are in a similar business. And you can see from that chart that the financial ratios are all in that same ballpark. And as I said earlier, we mustn't confuse those of us who are manufacturers at the bottom of the pyramid to be tech companies. I wish we were. I really do, because then my valuation will be so much better. But that's not what the market thinks. We are a manufacturing enterprise. As I indicated, 42% of our revenues, for example, come from the traditional auto business. More recently, there had been another development. The directors of Fuyu have sold 30% to Pilgrim Asia. They sold it at 13 times PE, 3.6 times Ebitda. The scheme is at 26 times PE, 5.8 times Ebitda. We are in the same business. The founders of Fuyu have been in this business for more than 30 years, just like me. I'm very certain that both our companies are in exactly the same part of the business cycle. They know the challenges facing our business just as well as I do. The fact that they have chosen to sell at this time at numbers that are significantly different from the offer is something to think about. Let me go on now, for example, to the structure of the offer. The offers being made by myself and Novotellus, which is run by Mr. Lok Wai San. When I was putting this together, the deal exceeded my personal capacity. I needed an equity partner, and I turned to Wai San to see if he would be, through Novotellus, would be the equity partner. Let me give you a background to this. I had first invited Wai San to the board of Sunningdale in 2018 because I was impressed with the way he had turned around AEM Holdings. When I decided to make the offer for Sunningdale, I invited him not only because of the financing that was required, because I think there can be other sources of financing. But more important is the fact that he has the experience of restructuring. He's someone that I felt I could spar with, bounce ideas with, and I honestly think that two heads are better than one. As I indicated earlier, I can't tell how the future will unfold in terms of trade tensions, in terms of COVID. I only know this, right? The customers are demanding that we pivot fast. This is someone who has done it before and is someone that I can at least work with through this period. Now, I want to emphasize one thing. The minute I asked Wai San to join me in this, we notified the board. And from that day onwards, both he and I did not participate in further meetings in Sunningdale because they were led by the independent directors. I had also mentioned that I had approached Sam and Yarwood to give me an undertaking that depending on how the outcome is, they would take the stock of the company. And as I've indicated, they've been with me since 2014. They understand the ups and downs, they're business people. So to cut a long story short, I needed that underwriting of the share because I thought that most people would want the cash, and that would exceed the abilities of the package as a whole. So in summary, let me just say this. Market conditions are changing, they're changing rapidly. Customers are telling us that every day. Our scheme provides shareholders with a choice. Exit now at a significant premium to the traded prices, to the prices and closing of Sunningdale over the last 12 months. Or if knowing everything that you know, you're willing to journey with us, you have the option of picking shares in the private company. There has been no other approach since the 9th of November. So I hope now to be able to answer some of your other questions, and I would encourage you to try to look at this and vote at the EGM.
Thank you, Kui Boon. Boon Hui, I think you come through as a very passionate about this whole thing. Because you've been in Sunningdale for a long time, I can understand. The questions are flashed on the screen, which are long, some of which are long. Indeed, very good questions, I must say, from shareholders. Whilst you can see the question on the screen, I will present the gist of the questions to the panel, all right? And we got to be short and sweet. This time we have another half an hour or so. Questions not answered tonight, including those questions submitted during the session. Because of time, limited time, we assure you that they will be answered by the company and be posted on SGX website. All right, hopefully. Now, the first question, all right, those who are watching this, you can look at it very carefully, but can the offeror explain the rationale as well as the accentuating factors? You revised the offer from 155 to 165. Can you explain the rationale as well as the accentuating factors for this revision?
I can completely understand the sentiment of the shareholders.
Yes.
I did listen to the feedback. And that's the reason I revised the price from 155 to 165. Given the feedback and, to a certain extent, better market sentiment. When it comes to the price, there are several factors. The first is past transactions and comparables. Very traditional way of looking at it. And as I said, at 165, we had a 42% premium to the traded prices. It is also above the highest price over the last 12 months. It's in terms of PE, as the IFA pointed out, it's on the higher end, you know. But I was actually delighted at the end of the whole thing that when I read the IFA's report last week, because I was not involved in the thing before, it was within the range and towards the high end, all things considered. The second factor in looking at the price, obviously, is that this is the limit to what we could put together after making sure that there were people who would take the shares and who would do all that thing as I described a little earlier. The third factor, obviously, is that there is a risk to the transformation that that I believe is necessary to execute for Sunningdale. I've gone through some of that before. I do not think, for example, that the trade tensions between China and the US are going to go away. I can't tell how it will develop, but the chances of it improving, even with the new president, I think is risky.
Slim.
I would actually like to tell shareholders that all you have to do is hang on. You know? Just hang on. When COVID-19 is over, things will get back to normal. With a new president in the White House, maybe trade tensions will abate. And then we can all participate in the next upcycle and everything will be good. I personally do not believe that that is the scenario that will happen. And so while I cannot, as I pointed out earlier, while I cannot foretell the future, I can tell you exactly what customers are demanding today. Come to my backyard, or we might have to find an alternative. It is not without a challenge. For the last 30 years, our entire industry, Sunningdale, the strategy is very simple, David. Manufacture in low-cost Asian countries, export to developed countries in the West. How could you go wrong? Today, and we've just made the first acquisition of Sunningdale, Moldworks in the US. That's a high-cost country. the US also happens to be a highly litigious country. Right? But it's not enough. They're demanding more and more of this. I am fully aware of the risk of this strategy. I'm old enough to remember Yeo Hiap Seng and Chun King, Ron Sims, O Sim, and Brookstone. Even a company as big as Sony, the losses they suffered for almost a decade in the United States. More recently, the adventures of Chinese acquirers. I'm well aware of the risk. But do I have a choice? Does Sunningdale have a choice? I hope to navigate this better than history, but history is not exactly encouraging right now. You know these histories almost as well as I do. These examples, people may have forgotten, but they're real. They really are. And if I can be honest, Americans sometimes, maybe more than sometimes, have great difficulty with the concept of reporting to Asians, especially located this far away. So it is not without the challenges and without the risk. But the company has to face this head on. The status quo will not secure our long-term future. The status quo, I think, imagining that things would go back to a semblance of normality, I think we might be fooling ourselves.
Would the offer document states that the offer price will be reduced if any dividend is declared, right? I wonder why you included this, and does it mean that the offer price can be lower than the 1.65?
The offer price is 165, not a single cent less. This clause actually is very standard for all transactions of this nature, because as the offerer and being distanced, I do not know if the board would declare a dividend in the interim period. So this is actually standard in all of these transactions.
Right.
I think you know that.
Yes, standard, but some shareholders don't seem to understand.
Yes, I realize that. I realize that,
yes.
But I want to assure the shareholders that they will receive one way or the other $1.65 in cash.
Good. Comparing with industry peers, Sunningdale has PB of 0.825 at 1.65 price. UMS 2.813, Lok Wai Sons AEM 6.5, Franken's 1.9, High P 2.6. S-Dale is clearly undervalued, they believe. They say to me, look, compare all this, it may be undervalued. Justify your low price offer. Is it a low price offer?
Well, as I've explained a little earlier,
yes.
The offer is towards the high end on PE. It is comparable in enterprise value to Ebitda. It is low on the price over NTA, which is what you have just pointed out. And I've explained why I believe that NTA is not a valid measure for our manufacturing businesses in this industry. There will always be exceptions to this, David. But as I indicated, 60% of companies on the SGX with a market cap under 500 million trade below NTA. We are not unique in that situation.
Well,
and the market has never reflected.
Yes.
The market has never reflected our NTA in traded prices.
So there is a misunderstanding about the way they have looked at this.
Because I think you have to look at it. You have to look at it in totality. I think focusing on only one thing is not appropriate.
Which is also a point I've mentioned during the presentation. that yes, we look at the earnings approach and also consider the asset-backed approach. And our belief in our assessment is that the earnings approach is more appropriate valuation assessment of the Sunningdale shares.
Yes.
And if you look into the comparable companies as well as the precedent M&A transactions, there are companies that are traded below book. So it's just at the range, and the median happens to be above 1 time. Yeah. Yeah.
Some shareholders would like me to ask you, how independent are you in this matter?
Okay, we are truly independent.
Yes.
And we have been in this industry for a long time.
Yes.
I have been in this industry for a long time, and acting as an IFA for takeovers, for interested person transactions, etc. And in particular for takeover, there is very clear rules as well as practice guide by the SIC, Securities Industry Council, that ensure that IFA must be not only independent, but to be seen as independent. And that's how strict they are. Yeah.
So you followed the SIC rules very strictly?
Very strictly. And if I am in doubt, I will write into the SIC and clear. So in the past, I have also, given up deals that seemingly, not seen as independent, because the message is very clear. You must not only be independent, but be seen to be independent. Yeah.
Well said. Can the company provide an update to existing shareholders in terms of its strategy as well as its operations? How necessary or important is this privatization exercise to Sunningdale's future strategy and or operations? It's a long one, but perhaps you could,
Yes.
summarize it. Yes.
I understand. As I've indicated previously, I cannot forecast the future, nor can I say what exactly needs to be done in the future, because we're crossing the river by filling the stones underneath us, because things continue to change. What I do know is what the customers are saying, as I've indicated, and what their demands are, right? And the fact that I believe that pivoting fast requires Sunningdale to execute, that it is easier for Sunningdale to execute it in private than in the public arena. In the public arena, it's not that it cannot be done, but it takes an extremely long time. Let me give you an example that, of course, I'm familiar with, and that is, in fact, AEM Holding. Today, it is a very successful company. People forget that the restructuring started in 2011. They were unprofitable for 3 years in a row. In the year 2014, they did not declare a dividend. At one point in time, they were on the SGX watch list to be delisted. This is not that transformation cannot be done in public. It's just 10 years in the making, or 9 years, or extremely long period of time. I think the China-US trade tensions and the demands of the customers, as a result of their understanding now that security of their supply, resiliency of their supply chain is so paramount to them, I don't think they're going to wait, 5, 6, 7, 8 years for Sunningdale to transform. That's the reason it needs to be privatized, so that it can be more drastically altered more quickly.
The next question highlights the challenges that for you moving forward, wouldn't keeping the status quo, that is remaining as a publicly traded company, provide Sunningdale the ease and access to capital for its expansion plan? Also, how significant does Sunningdale envisage its future cash outlay to be? Has the company considered other means of financing, rights issue, and/or debt issuance, private placements, bank borrowings, restructuring efforts. Now, these are shareholders who are trying to tell you how you should be doing this.
Of course. You know, the shares of Sunningdale have been illiquid, as I indicated, for a very, very long period of time.
Because they have confidence in you, they're staying with you. They're not selling the shares.
I wish. I really want to believe that. Yeah. Issuing more shares, anyone who decides that they want to become a significant shareholder of Sunningdale must grapple with this issue of trying to realize that investment in a highly illiquid market. I know that Sam and Yahud invested with me in 2014. They're sizable shareholders. But if I can be quite frank, it is hard for them to realize their investment.
The near future.
It has been hard over the last 5 years. I don't know about the future.
Okay.
It has been hard over the last 5 years.
Okay.
No matter what the trading was at that point in time. So, you can do that, but that is a risk that you run. And the second factor is that these things will be dilutive to current shareholders.
So, if I would ask you just in one sentence, what's the most governing factor, the most pressing factor that made you do this?
One, I want to secure the long-term future of this company. I would hate to know that on my watch, it didn't do well. I want it not just to survive, I want it to continue to thrive. As I indicated, it's not without risk. I am well aware of the challenges facing Asian companies who have gone into the US market. I'm fully aware of it. I'm hoping that I can navigate it better. But let me be honest, I haven't done it either. Moldworks is only 3 months old, and it is a small acquisition so that I can test things out.
As a private company?
No. To test things out in the US market.
Okay.
Yeah, but anything more significant, I think is better done in a private company. And finally, as I indicated, its numbers are important. But this is a company I founded 30 years ago. It means something to me, regardless of whether the price is, here or there. It also means something to me that so many of my 700 people have been with the company for more than 20 years. And I'm not kidding, I gave out 30-year awards. This is significant for an SME because I sometimes listen to all of the complaints that companies have about retaining workers and things like that. And I understand it, I appreciate that, I know it happens. But we are unusual. If I count all the people in Sunningdale, or among my 700 Singapore employees, which is of primary concern to me, there's a really, really large number who are 20 years and above. And that means something to me because they spent all their time with me. I have to do the best I can to make sure that this continues.
So there are significant risks to be assumed by a minority shareholder of an unlisted offshore private company. I mean, it's not like being a shareholder of a listed company.
Yeah.
You can trade in a market. Can the involved parties help shareholders understand what is it in for them and whether are the terms made in the best interest of the minority shareholders?
David, there is no differentiation between the minority shareholder and other shareholders. I know I may not have been clear earlier. I said that, for example, large shareholders like Sam and
Yes.
Yarwood had given an undertaking. But recognize that they are actually subject to the same scheme as all the other shareholders. There's no
Yes.
difference between them and the minority shareholders. If they will be scaled back in terms of their option for shares if other shareholders want it. In fact, to a certain extent, they were doing me a favor by underwriting this from the share point of view. So they're not being treated differently from the others. The ratio of their cash and shares will be exactly the same as the minorities.
Okay, that's assuring. But the scheme shareholders is only up to 30%. Does this mean massive dilution of shareholder shareholding? How do you make this equitable? Comes from a very small minority shareholder.
Well, one, whatever they don't get in shares, they will get the $1.65.
Right.
Right? And as I indicated earlier, in fact, I'm sort of pleasantly surprised that so many people want the shares.
Yes.
Right? Because, in fact, my worry actually was that nobody would want the shares and there would not be enough cash to buy everybody out, which is why I sought the undertaking from Sam and Yarwood in the first place, right? So that, okay, you guys don't take the cash, you take the shares, because the shares will go to everybody else. But if it turns out that, there are people who really want to go on this journey with us,
This is
that's the
because
reason we
this is
presented
because
the
of
option.
Boon Hui. I mean, for Boon Hui, they know you're an experienced businessman, excellent investor. They don't want to leave you. So Boon Hui, they invested because of you, Boon Hui.
Yeah, I'm flattered by that. I wish that
Yeah, this is what they tell me.
I wish that they would provide the company with a little more liquidity.
Okay, so they tell me we are there because of Boon Hui, and now you want to take it back from them. They say.
No, I'm giving them the
Yes,
option.
correct. You're giving them the option, giving them shares. But can you reiterate your perspective on Sunningdale and this exercise as the offerer has, well as a chairman, is also the chairman? Is there, they wonder, a conflict of interest? I mean, you've been in the company,
Yes.
you know all the facts, you know what's happening. They don't know much of what happens in the boardroom. But are you taking advantage of them?
Yeah.
Well, the company itself, or rather the independent directors themselves, were concerned that all the shareholders need to be treated equally, naturally, whether they're big or small. So as soon as we had this offer on the table, we say, well, those making the offer should not be involved at all in the discussions. So the independent directors were the only ones that met, appointed the financial advisors, independent financial advisors, and no involvement whatsoever for Boon Hui and Mr. Lok. Okay, so they were never in any way involved in any matter concerning this offer.
So he has explained very clearly, as a private company, given the challenges that's coming on the horizon, it's easier for him as a private company than as a public listed company to face those challenges. Still, it's just something that he knows that they don't know. You know what
Well,
they're thinking?
we have been very open with the shareholders. We have been making announcements whenever that affected the price or the shareholders need to know. Okay, and we also have constant dialogues with the shareholders. The only thing we could really complain about is there were not enough people coming forward. We engaged the brokers, and brokers complained that, well, your liquidity is so low, it's quite difficult to interest people. But we've been trying very hard to interest people to come and talk to us. Okay. With limited success.
And you will continue to talk to them.
Yeah, we continue to talk to them. Yes, yeah.
Since both Mr. Koh and Mr. Lok are already contributing to Sunningdale as directors, how much difference would it make when it is privatized? Would the company be run any different from now? Does it appear that the inclusion of Novotelis is a significant deviation from current arrangement? As such, what value add can Novotelis bring to the table?
Yeah, I think, David, I have to say that when this, because I mean, Novotellus is not involved in Sunningdale at this juncture. It's involved with me as the offerer.
Offerer, yes.
Yeah. And when I approached Y-Sun to ask if Novotellus would participate, as I indicated earlier, it was predicated on two things. I needed an equity financial partner because it was beyond just my means for the size of the transaction. But more important than that is the fact that he has had the experience of a turnaround. It isn't only AEM, because he's actually in the private equity business, and they do this much more regularly than I would. I just wanted somebody to go on the journey with, because it's not without the risk, as I've mentioned to you before, right? And if I can come back a little bit earlier to the question that you asked about whether I have a conflict of interest. As far as the minute we made the offer, we have not been involved in the deliberations of the company. But I would also like to point out that offers of this nature are almost always this way, right? I mean, in the case of Hy-P, the offerer is Mr. Yao. He already owns 80+% of the company. You can also accuse him of knowing things that the public may not know. In fact, my situation is very unusual in the annals of history in Singapore. I have 15.5% of the company. Most times these kinds of offers are made by people who already have 50% of the company, and they says, well, I've already got control of the company. Why don't I just privatize it, right? But in this particular instance, I've got 15.5%. I cannot recall another situation where the offering shareholder had such a low percentage in the company.
Okay, good point. But if the scheme arrangements failed, what is the BOD, Board of Directors, management going to do? You must have plan B or C as one shareholder. Is true value of the company $2 per share?
Well, if the scheme doesn't go through, the board will need to meet again and decide the future strategies. At the moment, I cannot really predict what's going to happen in the future anyway. Yeah.
So, is the true value of the company $2 per share?
If you ask me
Yes.
as an IFA, like I've mentioned, we have arrived at a range of
Yes.
155 to 168.
Right.
That is what we deem as a fair value.
So they always want more. and
Yes,
more.
yes, yes. and we
That is
explain,
true.
yeah.
Yes.
And we explain,
No,
yes,
they
the
want more.
NTA is close to 2, but
Yeah, I mean, never enough.
I mean,
But David, I think
Asking is free, yeah?
that's true, yeah. But David, I think the independent directors also felt that, yes, we have an IFA, but the IFA can also, wouldn't say bias, but could get a figure out of whack, so to speak, or possibly. So we also had our own advisor, the company itself, our own financial advisor in the name of Deloitte, to advise the independent directors whether the calculations and the comments made by the IFA were balanced or not. Okay, and the independent directors were the conclusion. Yes, they were well balanced, taken into account all the factors, so that's how we came to the conclusion that it's a fair and reasonable offer.
and David, there's no such thing as an offer that is high enough.
High enough. Yes, right. That's right. Yeah. No, I mean, the exercise tonight is to provide reasonable and acceptable answers, and that's what we expect from the panel, and it's happening. So another few shareholders would ask, why hold the scheme voting just before Sunningdale's report for FY 2020 results at end February? Q3 2020 results were stellar. likely FY 2020 also would be great. All right. Management knows more will vote against after FY 2020 result. Is that a correct prediction or assessment? You know.
No, I can understand all of the sentiment and all of the reasons for this
Yeah.
question. There is no good time for something like this. It wasn't timed specifically for something like this. The reason is, no matter when you launch an offer, there will always be another quarter's results coming out.
Yep.
All right, and I can understand it. You know, the third quarter results was quite good, simply because you might remember that in the first quarter we had shutdowns in China, and then in the second quarter we had shutdowns in Malaysia. So there was a pent up, from the brand owner's point of view, there was a little bit of a pent up demand that spilled over into the third quarter. And I'm not at the ability to comment on anything beyond the third quarter, because the scheme was announced, the holding announcement was made on the 9th of September, which is well before the fourth quarter started. But in terms of timing, these things have a timetable that is dictated largely by regulatory, and I think you know this, it's dictated by regulatory procedures and processes.
Yes.
There is no perfect time for this. You know, if it were not this quarter's result, it would be, what were you expecting for the first quarter's results?
Right.
Because it's every quarter that would happen.
So there is a question from the shareholders of 2020, financial year 2020. Will Sunningdale duly pay investors' final dividend for FY 2020 if the scheme passes?
Well, the board meets on 26th of this month.
Yes.
So until then, really, we can't have come to make a decision anyway. Because typically, the board meets, and then we discuss, we take into account the cash flow, the capital expenditure, and things like that anyway. Okay. So really, I can't predict whether there would be a dividend or no dividend.
Right. So, 14th question, number 14. The management mentioned about fast response to investments in high-cost centers. How are you going to get funding from listed sources of equity, bonds, etc., versus private company? Raising funds.
Well, if it is successful, and I suppose it's a private company, it would be my responsibility.
Yes.
Yes.
And you're good at that. Raising funds.
Well, I think in today's world, right, there are more sources of financing available. If we can establish our position, for example, in the US, and over time develop banking relationships, debt financing is obviously something to be considered, especially since debt is extremely inexpensive right now.
Yes.
But there's also a misunderstanding about this, because many people, for example, look at Sunningdale and say that, oh, you've got some cash on the balance sheet. Actually, Sunningdale has a significant amount of cash on the balance sheet, but it also has a significant amount of debt on the balance sheet. And why don't you just match the two and reduce it? The reason is because when you operate as we do, the debt and the cash tends to accumulate in different pools, and in some countries that we operate in, like Malaysia and China, there are such things called foreign exchange controls that makes it hard for you to match those things off. And I think shareholders need to be, I don't expect all shareholders to be completely au fait with something like this, but it is a consideration. So yes, that is always a possibility, but you also have to be careful. Yeah.
So your prayer is COVID will go away, and US and China would get on even heel, they will settle their differences, and the world would be a better place for you to do your business.
That's not my prayer.
Then?
As I've told you already, that I do not believe that
That
scenario
will happen.
Yes.
Okay. So how long do you think it will not happen?
Well, if you look, for example, at the example of the headline on Saturday's newspaper, in Saturday's newspaper, one of the things that surprised me most was the headline that said that even if we vaccinate at our current rate, this isn't going to be over for the next 7 years. That's a little frightening.
That is frightening, yes.
Yeah, but I'm reading that headline at the same time that you are.
Yes. Well, but they want your expert view. The management mentioned, these are some questions that's just come in. Management mentioned about fast response to investment in high-cost centers. How are you going to get funding from distance also? This is what I just asked him.
Yes,
The
right,
next
yeah.
question.
Yes.
15th. I think this is, we have already
You
asked
just
him.
asked this. Yeah.
Asked him. The next one, yeah. Another 3 questions. All right. Manufacturing companies have risen between 30 to 50% since 9th November, while Sunningdale is stuck at offer price. Is the offer still fair in your view? Manufacturing companies.
Well, I think I have to leave the shareholders
Yes.
to judge if the offer is fair.
Mm.
The independent IFA has indicated that the offer is in the high range of Sunningdale's undisturbed price. I think the ones who have risen 30 to 50%, I do not know if those numbers are accurate, but the ones that have risen 30 to 50% haven't had an offer at a 42% premium. So I would say that 42% premium fits right in the middle of that range.
Good. Next question, can you flash it? Mr. Koh, if we were to accept shares of Sunrise, do we have assurance that minority shareholders will have the same rights in all aspects as other majority shareholders, which you have said you will treat all of them?
Yeah.
We treat all shareholders equally. But shareholders should understand it. As a private company, the cadence of reporting will not be the same as a public company, right? Otherwise, we would incur all of those costs anyway. But however, we would keep shareholders informed as and when necessary, and they will all be treated equally.
When all things being equal and things got better time to come, whether 7 years or 5 years or 10 years, you're flying, let's say, will you come back to listing again? No.
That is too far in the future for me to think about.
You can't exclude that.
Yeah, I won't exclude it, but
Yes.
it is too far.
Far ahead,
Things
yeah.
have changed so much in the world that we live in, right?
Yes.
I mean, when Sunningdale was listed, how many decades ago, I would say that alternative means of raising finance was next to zero option.
Yes. Can I ask you publicly, how old are you?
I'm 70.
70. You're 7 years younger than me. You have a long way to go.
I have a long way to go.
But you do have some.
No, to a certain extent, I wish I weren't doing this.
but you
because
Yes.
I'm motivated by making sure that the company thrives,
yes.
and that my 700 employees are taken care of until they decide they want to retire.
But during the financial crisis, we had difficulties in borrowings, especially from foreign banks. Yeah.
Yes.
Even local banks, we had difficulties.
Yeah.
I mean, needed a lot of negotiation, and yeah, so it's not so easy as
Yes.
money is easily available.
Yes.
You know, it's interesting. You know, the challenges that are in front of us are really, really daunting. You know, this company has been through the Asian financial crisis. It's been through the great GFC in 2008. Those times aren't easy, but they were financially triggered crises,
Correct.
which means that, and I believe Sunningdale has always been very prudent in the way we manage our finances and our balance sheet. So while they were challenging, and we had to tough times, you know, including sometimes having to let some people go in some parts of the world. We didn't do that in Singapore. It's still financial in nature. This time around, the challenge isn't about financing.
No.
Money in the world is free today,
Yes.
right? But the trade tensions, the shift in paradigm to resilience and security of supply, this has more repercussions, I believe, on the bottom tier manufacturers in the ecosystem and on Sunningdale than the other two.
Well, in the circular 13.1, 1 and 13.2.1, can you elaborate on who can vote? Example, does it mean Sunrise can't vote?
Yes.
Yes.
Sunrise, I will not vote.
Yes. All right. So we have had a very interesting evening. All right. Quite forthright and good answers they've got. Any more questions that you have, you can send it in still, and I'm sure the company would be willing to answer the questions and post them on SGX. Thank you very much, Boon
Thank you,
Hui.
David.
Thank you, David.
It's the same.
Thank you.
Thank you,
Thank you
David.
indeed, and all the best.
Thank you.